The European Central Bank cuts rates as expected, but bets build on a summer pause. The ECB cut its deposit rate from 2.25% to 2%. That means it's now cut rates 8 times or by 2 percentage points since last June. Inflation is now within its 2% target, and so the focus for the markets has shifted to whether the central bank will hit pause on its cutting cycle this summer. Well, Vicky Price is Chief Economic Advisor at the Centre for Economic and Business Research. Now, Vicky, today's rate cut was no surprise, and in fact, the ECB has lowered its inflation target for next year to just 1.6%, well below its 2% medium-term target. So surely the markets are right to expect policymakers to hit the pause button.
Perhaps, but I think the ECB is more worried about perhaps having disinflation taking place. I mean, we did see a period of falling prices during the Eurozone crisis, so it's going to be looking very carefully at what growth does over the next few months before it decides whether to carry on with the cuts or not. And given that the inflation outlook is for one which is well below targets for 2026, then I would imagine that there could actually be still room for a cut in interest rates.
Now, what do you make of some of the commentary that came alongside this cut, in particular that the ECB believes the economy is more resilient to global shocks? Are they right to be so optimistic about the state of the economy?
There have been some signs that both consumer spending and confidence and also industrial confidence has improved a little bit. But I think a lot of this has been due to the fact that industrial production went up significantly in the first quarter in order to avoid the tariffs in the US that were coming, and exports to the US went up quite significantly. The question is, will that improvement continue? And obviously, depending on what tariffs in the end are imposed in the EU, that's quite questionable. So I think they were still going to be quite concerned about what will happen next. But the fact that we have seen a bit of resilience in the short term suggests that maybe the ECB will be a little bit less worried about the future. Nevertheless, they have reduced the forecast for 2026 slightly from what it was before.
Now, in just under 2 weeks' time, it will be the turn of the Fed. What are you expecting here?
What we've seen in the US, of course, is quite a slowdown in the economy. Lots of indicators, whether you look, for example, at employment or even at spending and confidence. And there have also been, of course, attacks on the Fed by President Trump, who really wants to see a cut. I think the Fed will try and resist all this. We want to see what the final tariff situation is. Not, of course, that we can assume that anything we hear about tariffs may be final. Anything could change in the future. But I think they're going to be cautious. So my expectation would be no cut.
Now, what about the leadership at the ECB? There's been a lot of speculation surrounding President Christine Lagarde and whether she'll leave her position early to become chair of the World Economic Forum. In her press conference, she announced that we haven't seen the back of her and at the ECB, and that she was fully determined to complete her term. But how significant would her departure be if it were to happen?
It's interesting when you see what apparently has been discussed between Lagarde and of course the World Economic Forum. And the way I had read it was that she was already discussing the possibility of joining in 2027, which would be when her term expires. And she has more or less said that today. So for me, it sort of agrees with what I had expected would be the case. Now, whether it is a strange move or not, then people can make up their own decisions. And of course, the World Economic Forum is going through a bit of a problematic period right now in terms of its leadership. But I think overall it would be quite a good appointment. But I don't think it's likely to be happening in the short term.
Now, Christine Lagarde is well known for keeping her cards close to her chest when it comes to future rate cuts. But what are you expecting for the rest of 2025?
I think we'll see another cut, certainly. We might even see more. It all depends on whether the sort of slowdown that is likely to happen if the tariffs that President Trump wants to impose stay there, are imposed and stay there, then we might well start seeing a bit of an easing of what we saw in the first quarter, which was quite a strong performance by the Eurozone. So I think there is room for a further cut. And I mean, just look at the inflation, which of course was below target in the last month. I think that trend seems to be continuing.
That was Vicky Price from the Centre for Economics and Business Research. And don't forget, you can watch more videos on Reuters.com.